Technical analysis. Different methods of analysis have been created in the course of the trade evolution on financial markets. These methods contribute to accurate market forecasts and therefore gainful trade. At the early stages of forex trading, it was easy to get lost in a maze of dubious methods of market forecasting. However, in the course of time, only the most viable and efficient methods took shape and gained recognition. Basically, types of analysis have separated into fundamental and technical. Let's have a look at these concepts. Fundamental analysis is used to forecast a price direction on the grounds of fundamental data, such as macroeconomic indicators, political events, and even weather factors. This kind of analysis is more practical to forecast a price dynamic in the long or medium term. The other kind of analysis, technical analysis, suits much better to make a short-term forecast. Technical analysis is based on analyzing patterns of a crowd activity, which has already been affected by some market drivers. From the angle of technical analysis, there are some principles and correlations which determine further market developments. Technical analysis rests just on two basics: a price of an asset and a volume of deals on this asset. Technical analysts believe these two indicators display the historical performance of the market. They are enough to assess a market situation and determine what trend will continue in the future. Technical analysis owes great popularity to its wide use, flexibility, and versatility, so traders can make good use of technical analysis methods as they match any market. Due to a variety of methods, any market participant can create one's own trading system. Technical analysis is an assessment of a market dynamic by means of charts and indicators with a view to forecasting a further price direction. The concept of market dynamic includes such terms as a price, supply, and demand. However, a price is considered to be the main criterion of a market assessment. Technical analysis is a study of a price dynamic in the past with the use of charts and other tools to identify patterns that can suggest future activity. Technicians give a price dynamic top priority as it is the most precise barometer to measure investors' sentiment, which reflects how demand and supply are related. Despite obvious advantages, traders should not rely entirely on technical analysis. However, it will provide smart traders with a realistic vision of the market and help them make the right trading decision.